It's Monday, November 4th, 2024, and I'm Dave Sobel. 3 things to know today. U.S. GDP growth holds steady at 2.8% when we look at the job market. Intel reports a record $16.6 billion loss amid layoffs and depreciation. And H.I.G Capital and Thoma Bravo to acquire CompTIA's certification business, transitioning to a for-profit model. This is the business of tech. The latest GDP report indicated a 2.8% annualized growth rate for the July to September period, building on a 3% increase in the previous quarter. Consumer spending played a significant role, rising at a 3.7% annualized rate, contributing nearly 2.5 percentage points to overall growth. And the October jobs report revealed stagnation in job growth, with only 12,000 new jobs added in a month, where total employment reached 159 million. This disappointing outcome, exacerbated by hurricanes and labor strikes, suggests potentially underlying weakness in the labor market. According to ZipRecruiter chief economist Julia Pollack, the report reflects a broader trend of a slower labor market, even as the unemployment rate remains steady at 4.1%, the lowest heading into a presidential election since 2000. Notably, revisions to previous payroll numbers indicated a loss of 112,000 jobs in August and September, and the share of adults employed fell by 0.2 percentage points. Tech employment remains stable, according to a recent analysis by CompTIA. The tech unemployment rate held steady at 2.6% in October, while the national unemployment rate also remained unchanged at 4.1%. The report highlights a positive trend in hiring, with 223,000 new job listings for tech positions and an increase of 70,000 tech professionals in the workforce, bringing the total to nearly 6.5 million. However, employment within the tech industry sector saw a slight decline, losing 4,029 jobs. According to the National Federation of Independent Businesses' October jobs report, small business employment remained steady despite ongoing labor market challenges. The report reveals that 35% of small business owners reported unfilled job openings, the highest since January 2021. Hiring efforts have decreased, with only 53% of owners attempting to hire, down 6 points from September. Notably, 46% of those hiring reported few or no qualified applicants, while 25% found only a few qualified candidates. Additionally, job vacancies were most pronounced in construction, transportation, and the wholesale sectors. Despite a net 31% indicating they raised compensation, this marks the lowest increase since April 2021. And a recent study by the International Workplace Group reveals that 95% of CEOs have invested in new technology over the past year to enhance hybrid working, with 43% identifying technology as their largest investment. Looking ahead, 87% plan to continue funding advancements in areas like cloud, AI, and security, driven by the desire to improve employee experiences and achieve cost savings. Notably, only 21% of individuals are willing to commute more than 30 minutes for a job, prompting businesses to shift from traditional downtown offices to regional spaces. Investment priorities include cloud technology at 62%, AI and automation at 52%, and security at 52%. The study indicates that hybrid work has increased productivity for 74% of employees and job satisfaction for 85%. Mark Dixon, CEO of International Workplace Group, emphasizes these investments reinforce a long-term commitment to hybrid working. Why do we care? These reports highlight that while the labor market is still growing, the pace is narrowing, raising concerns about future employment trends. And the findings underscore the persistent struggle small businesses face in filling positions amid a tightening labor market. So SMBs are likely under more pressure than their larger counterparts. And that may be less true for the IT services companies serving them. Today's episode is supported by Huntress. You want to focus on your clients and are always looking for ways to get more time. Use Huntress's fully managed cybersecurity platform to fight off cyber threats. Huntress is more than cybersecurity software for endpoints and identities. It's a 24/7 security operations center. It's security awareness training, community engagement, and dedicated partner support with an average CSAT score of 99.3%. Technology can only get you so far. Human expertise is what's needed to truly elevate and protect small businesses And you get that with Huntress. Secure your clients and help them thrive with the #1 rated EDR for SMBs on G2. Visit huntress.com/MSP Radio to find out more. Intel has reported a staggering $16.6% billion loss for the third quarter of 2024, marking the largest quarterly loss in the company's 56-year history. This loss stems from $15.9 billion in asset depreciation and a $2.8 billion restructuring charge following layoffs of over 15,000 employees. Despite a 6% drop in total revenue to $13.3 billion, the company's projections for the current quarter estimate revenue between $13.3 billion and $14.3 billion, which is still lower than the previous year's figures. CEO Pat Gelsinger emphasized the urgency in addressing the company's challenges as Intel's share price has plummeted 60% since he took the helm in February 2021. Meanwhile, competition from firms like NVIDIA and AMD in the booming artificial intelligence chip market has intensified as Intel struggles to regain its footing. And in a historic milestone, Reddit has reported its first profitable quarter as a public company, achieving a net income of $29.9 million on revenue of $348.4 million for the third quarter. This marks a significant financial turnaround, with executives noting much higher adjusted earnings before interest, taxes, depreciation, and amortization than anticipated. Following the announcement, Reddit shares surged over 20% in after-hours trading, reflecting strong investor confidence in the company's performance amidst its recent AI licensing deals. Why do we care? Well, Intel is increasingly under fire. While I suspect most providers aren't dependent on Intel, with the Windows 10 to 11 refresh ahead, a significant choice is whether the long idea of Intel inside is significant. On the other hand, the insight with Reddit is how much data matters. The value of an organization can change significantly with data. H.I.G Capital and Thoma Bravo have signed a definitive agreement to acquire CompTIA's brand and products. CompTIA, known for its vendor-neutral credentials, has awarded over 3.5 million certifications globally, focusing on areas such as cybersecurity and cloud computing. Following the acquisition, CompTIA will operate as a for-profit company under H.I.G and Thoma Bravo's ownership. Its existing membership-based 501c6 nonprofit organization will be separated from CompTIA and continue its mission of service to the IT industry. The transaction is expected to close in early 2025, pending regulatory approval. MJ Shore of CompTIA posted online, quote, "The result of this split will ensure the financial solvency of the association in perpetuity, allowing us to increase our global focus and develop even more meaningful member benefits." End quote. Why do we care? The training business is now a for-profit business. Any pretense of we do this for the industry is gone as it relates to training. That likely doesn't matter. Just note that profit is now the motivation, not the industry's platitudes. Thus, CompTIA certification is no longer similar to the American Bar Association's mission to serve the public. CompTIA sells the parts of its revenue-generating lines of business that were making money and supporting the association, leaving a critical question. Is that association capable of being standalone? To date, it has not been required to do so, and so the question is this. Do you believe that the mission of service to the IT industry is defined enough? And are these the leaders that are capable of executing to that mission? Shore's comments imply an endowment model where the association operates off annual payouts from its investment portfolio. We'll have to see what comes of this. You should reevaluate your relationships with the now for-profit certification business and the now differently funded association as long as this deal goes through. Are you ready to get your brand in front of the tech leaders shaping the future of managed services? Here at the Business of Tech, we offer flexible sponsorship opportunities to meet your needs, whether it's live show sponsorship, podcast advertising, event promotion, or custom webinars. From affordable exposure options to exclusive sponsorships, our offerings are designed to fit businesses and vendors of all sizes looking to make an impact. Prices start at just $500 per month, making our packages a fraction of typical event sponsorship costs. Be a part of the conversation that matters to IT service providers worldwide. Join us at MSP Radio and amplify your message where it counts. Visit mspradio.com/engage today to explore all the ways we can help you grow. Thanks for listening. Today is National Candy Day and National Day of Community Service. Tomorrow is Election Day in the United States, and this is your reminder to get out and vote. If you got a comment or a thought on a story, put it in the comments if you're on YouTube, or reach out on LinkedIn if you're listening to the podcast. And if you've enjoyed the show, give us a review, and make sure you've subscribed on your favorite platform. I will talk to you again tomorrow.
The Business of Tech is written and produced by me, Dave Sobel, under ethics guidelines posted at businessof.tech. If you like the content, please make sure to hit that like button, follow, or subscribe. It's free and easy and the best way to support the show and help us grow. You can also check out our Patreon, where you can join the Business of Tech community at patreon.com/MSP Radio, or buy our Why Do We Care merch at businessof.tech. Finally, if you're interested in advertising on the show, visit mspradio.com/engage. Once again, thanks for listening to me. I will talk to you again on our next episode of the Business of Tech.
Part of the MSP Radio Network.